All right, folks, yesterday I explained how Bitcoin and gold were both sending a signal. Now we have Jamie Dimon, the CEO of JP Morgan Chase, sending a warning as well. Let's get right on into it, folks. Full breakdown for you guys on the current events, financial markets, and how we are going to get ourselves on the right side of this transfer of wealth. Now, back in 2022, Jamie Dimon warned that we were entering and had a economic hurricane coming our way. Now, at the time, we talked about how this was the case, how he was one of the few people that would actually come on here and actually say what was going to happen here. And we didn't expect the Fed to continue raising rates at the pace at which they did and as high as they did, but they went all the way up from about 0% Fed funds rate all the way up to over 5%. And here we are in a higher for longer scenario. Everyone listened in as all of the Fed speakers last week signaled that we might not rate cut at all this year. And so the expectations of 6 rate cuts last year, none came through. 7 rate cuts this year, now expectations are back down to about 3. And the market's still pricing in a soft landing, despite the data which I'm about to show you, which paints a very abysmal picture of what is actually taking place, folks. Take a look at it. Now, as I was saying, Bitcoin sending the signal, gold sending the signal. Bitcoin sending the signal that speculation is still rampant. That's what Bitcoin is proving. Bitcoin is proving that speculation is still running rampant, and it's the best instrument for speculation in the world. It's just a couple clicks on your phone, and you've bought yourself some Bitcoin, versus having to call up the precious metals dealer, place that order, and get that gold out of the vault into your vault, right? But we are seeing it right now. I'm going to break it down. Bitcoin sending the signal that speculation is still running rampant. There's still money flowing around. Gold sending the signal that you know what is about to hit the fan. And that's exactly what Jamie Dimon echoed in his investor letter to basically the shareholders and investors that he serves, his clients. So, folks, let's take a look at it. This is your gold chart back up. We just had the highest daily close ever for gold at a new all-time high. 2,354 is what we achieved yesterday. And we did the same thing for silver, back above $28 here once again, watching this thing follow in the tracks of gold. We love to see it. And then oil as well, also up to about $86. That's sending the signal as well. Now, we did see that Bitcoin did go all the way up above 71,000 again here today. We were waiting for this date right here. We have the solar eclipse. Maybe you guys watched it up here in the Pacific Northwest. We were blanketed in clouds, so I didn't get a chance to see it, but I saw the pictures of the moon that's not a moon, and all the UFO video. There was so much stuff about the solar eclipse. It was pretty funny, but nonetheless, we highlighted how this is going to be a very powerful moment for the markets, and sure enough, back above 70,000 for Bitcoin. 71,593 at the time of this recording. But I believe this is one of the last gasps that Bitcoin and the cryptocurrency space is going to get before we get a correction that is well overdue. In a typical pre-halving pump that we're going now through for Bitcoin, very typical, but going to a new all-time high, that's unprecedented. And that was spectacular to see. But now it's time for a correction. We're right on time. It's going to be completely normal. I'm not expecting it to be the bloodbath that we got in March of 2020. I don't think it's going to be as bad as last year's correction. And whatever does come through, I do believe it's going to be short-lived. So have your cash ready, that dry powder ready to roll, because if it comes through, we're going to have to move quickly. Now for XRP, it was back up to 62 cents here today. Now, I just can't seem to come up with any reason why XRP is going to miss this bull run. You guys can let me know in the comments down below if you have any reason, any justification, any fundamental reason why XRP is going to miss this bull run. I just can't seem to find one. The fundamentals continue to get better and better, and I have another video that's going to be dropping later today on XRP that has now reached a pivotal moment for XRP. Make sure you guys stay tuned for that one. Let's get right on into it, folks. What's causing gold to go nuts? Well, folks want to get away from their own economy and their own stock market. This is what's taking place in China right now, as Chinese gold ETF is trading at a 30% premium as gold breaks new record high. Investors there are so desperate to buy things that are not linked to their own economy or stock market, says Bloomberg's senior analyst Eric Balchunas. Now we take a look over at India, once again another nation part of the BRICS group, right? India just reported record monthly imports of silver. Record monthly imports of silver in India. China's central bank just reported that they've added gold for 17 consecutive months to their vault. And right now we're seeing the gold ETFs. It's absolute chaos in the gold ETFs in China. You have to understand this, folks. There are lineups down going for blocks to go to the precious metals dealer. People are selling, but people are also buying, right? Times are tough over there in China right now. Their economy rug pulled as well. And what the U.S. has done is they've inflicted pain upon all these other countries. And so they're retaliating by using gold as a financial weapon. And the people are getting away from their own currencies, their own economy, their own stock market. They know that, China's bubble has burst. And this is why they're flocking into gold ETFs, literally. Now, what are we doing over here in the United States of America? Well, our delusional investors, and we really actually should call them what they are, our delusional speculators now have concentrated the most in stocks since the Great Depression. The U.S. stock market is the most concentrated it's been since the Great Depression. Another data point that's taking us all the way back to the Great Depression would be the contraction of money supply growth. The last time the Federal Reserve contracted the global dollar supply by this much was in 1929 when they wanted to fundamentally change the system. They intentionally kept the supply tight for years to accomplish this. Now, do they want to fundamentally change the system here once again? Oh, you bet they do. And we have countries around the world that are trying to go away from the West. The dollar hegemony. They're trying to get away from that. They're trying to destroy it. They're using gold as a weapon of financial mass destruction. They're trading commodities directly. They're using blockchain DLT technology. And so this is already underway. But here in the West, right, we understand that we're going through it as well. And so we're inflicting pain upon our own people to accomplish this goal. This is what I've been saying since 2022. When we talked about going into recession, we said, yes, guys, this is a recession. They're not calling it one. It's going to be a silent recession, and inflation isn't going away. We have to be ready. And funny enough, in 2022, that's when Jamie Dimon was sending out the warning that the U.S. was entering an economic hurricane. Now, many people don't realize that their portfolios are just getting back to break even in nominal terms for the average stock investor in America. So they've been seeing that their portfolios have gone up, right? Oh, it went up 10% last year, went up 20% last year. When you really run the numbers compared with inflation, this is a data point. This is not me, folks. This is the data is telling us that the average retail stock investor is just getting back to break even when you factor in inflation. So for all these guys that think that they were making it just fine, that we avoided an economic hurricane, that it's a soft landing, well, they're only saying that if they still have a job that they're holding on to, and because on paper, their stock portfolio has been going up. In real terms, they're barely breaking even. They're thinking they're the smartest guy in the room making their 5% on their bonds, when real inflation's running at closer to 10%. You're not making anything happen. In fact, you're losing money. You know how much you're losing every year, right? You're getting 5% back on your bond. Real inflation's at 10%. You know you're losing only 5%. I guess that's better than losing 10%. But this is the delusional speculators that continue to run rampant in our space, saying and acting and pretending like they're making something other than just paper gains. That's all they're making. And you're about to see where the real value's at. And this is going to be a shift that allows us to build tremendous wealth. That's the beauty in this opportunity. I got excited when Jamie Dimon confirmed that we're going into an economic hurricane, just like Jamie Dimon probably was excited as well. I remember covering it at the time, and I said, guys, Jamie Dimon is waiting. He's excited to buy the blood in the streets. He at least is willing to come on there and tell America what's coming. Unlike many of these talking head pundits that just want to paper it over and tell us to feel warm and fuzzy inside. So JP Morgan Chase CEO Jamie Dimon says he worries geopolitical events and U.S. political polarization, quote, may very well be creating risks that could eclipse anything since World War II. Now, that was pretty slick of him. On the day that the eclipse occurs, he drops this investor letter to his shareholders. And he says that this may create risks that could eclipse anything since World War II. Confirming once again, the greatest transfer of wealth in world history, the greatest transfer of wealth since World War II. We got events that have, were in World War III, right? We just covered the data point. We haven't contracted money supply growth since the Great Depression, which was basically the precursor to World War II, right? Guys, this is a pivotal moment that we're now going through. And if you aren't prepared for it, you are going to get completely left behind. And what I want you guys to get prepared for is what Jamie Dimon is warning about. They are preparing right now for rates anywhere from 2 to 8%. The Fed funds rate right now is at 5.25%, right? It's over 5%. They are preparing for rates anywhere from 2 to 8%. Why would he have such a range? Well, the range on the high side is because he knows inflation's not going away. He knows inflation's probably actually, we're going to get the CPI data this week. CPI and PPI come out this week. Inflation's not going away. In fact, it's still running hot, which is going to lead us to have to raise rates even further, potentially. Now, guys, what do you think is going to happen to our economy, our mortgages, our real estate, if they take the rates to 8%? Now, historically, that's really not even that much. It's about double the average. The average rate's about 4 to 5%. So it would be a little bit more than average, right? But nowhere near what we used to be at historically back in the 80s. I'll show you that chart here in a moment. But the reason why he's actually playing it safe on the downside, rates could go down to 2%, is because he knows that we're in an economic hurricane. And he knows that if you know what hits the fan, what the Fed's going to do. They're going to cut rates and turn back on that money printer. And even if there's banks collapsing, JP Morgan, Jamie Dimon, they get to sit back and they get to pick over the skeletons. They get to pick over what's left and decide what assets they want to pick up for pennies on the dollar. Now, this article here from Wall Street Journal, don't worry, you don't have to pay for the Wall Street Journal. I got you covered here. Back to the 90s, Jamie Dimon raises the prospect of 8% interest rates. Now, this is what he put out here. And he says Monday that a combination of inflationary forces could push U.S. interest rates to 8% or more in the coming years. Like I said, it's all about inflation. Huge fiscal spending, the trillions needed each year for the green economy, the remilitarization of the world, and the restructuring of global trade are all inflationary. A lot of pressures there. He said JP Morgan is preparing for a range of scenarios where rates could drop as low as 2% or head to 8% or even higher based on where the economy is headed. He has warned about inflationary risks in previous letters in both 2022 and 2023. It's been decades since the interest rates were that high. Take a look. So here's your 10-year Treasury yield, and you can see that it is spiked here once again because the Fed has raised rates, so we had to adjust. This is why the banks and the central banks around the world have such big unrealized losses, because they were buying bonds back here at 0%, 0.5%, 1%. And then the Fed took rates to 5%. And now the 10-year is trading above 4% once again. And it's been spiking again here lately. That's going to drive your mortgages. The average mortgage is back above 7% right now at the time of this recording. Real estate reset underway. Fastest rug pull in history. And folks think that we're going to achieve a soft landing. Pass me a little something of whatever the heck you're on, because I want to hallucinate too, right? This is the fastest rug pull in the history of America. Very simply put, they raised rates at the fastest pace in history. Now, as I was saying, this is pretty much in line with where we've been at historically for the past, few decades, 30, 40 years. This is really where we've gone up to, 6% back at the beginning of the early 2000s, right? Then times got bad and we had to cut, and we took it all the way back down to about 1%, right? That was during the depths. And then they had to raise rates once again, and then they dropped them all the way back down to about 0 once that great financial crisis really set in. Okay? And some traders are starting to wager that the Fed may not cut rates at all this year. As I've been saying, now it's starting to finally get realized by the traders, and even the bond market got it completely right. The bond market had this huge sell-off. Yields were falling all through the last few months, right? And I said this is too early, because the Fed is not going to cut until it breaks. And we're nowhere near breaking, at least in terms of their manipulated data. Now, I don't think that the banking crisis is over. I think that we could have a potential black swan scenario. There's dozens of potential black swans that could play out right now as our financial system is showing cracks, is showing signs. The manipulated headline data tells us and paints us a rosy picture. But when you take those glasses off, when you take a picture, you take a look at what's happening on Main Street, when you read the earnings reports from all the banks, and they're warning you about all the charge-offs, they're warning you about all the delinquencies, we're starting to see foreclosures pick up. The most March foreclosures that we've seen in history for Phoenix since the Great Financial Crisis, I believe, or it might have even been the worst. I got to go check that data point once again, but over 6,000 foreclosures in the Phoenix metro, definitely spiking once again. And so, once again, these are the ripple effects that are being felt from what the Fed has done. They're willing to inflict pain upon the American people if it means that we can bring inflation back down, or at least attempt to, and we can maintain that cleanest shirt in the dirty laundry, which is all that we're accomplishing right now in an effort to maintain that reserve currency status. Their house of cards will come falling down, and I expect that to occur, if not this spring, I expect that to occur later this fall into the election. So I want you guys to be prepared for this. We'll be continuing to watch this. More updates dropping here later today. Make sure you guys have subscribed, hit that notification bell. I want to make sure that you guys are going to survive and thrive during these times. All of my community resources are available at zachrector.com. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.